All right, what is up, YouTube? So we are at 21,000 for the Dow, record levels for the S&P, record levels for the Nasdaq, and the tax reform policy seems to be very positive, and is going to be very positive for other companies. Hopefully, you guys are paying attention because the market just presented itself to rally to new record levels. And if you aren't aware of how stocks move, they move on news and they break certain handles on news or certain events. Now, 21,100 was our record high for the Dow Jones. It looks like we're going to close for the record for the S&P, and also Nasdaq hit record levels yesterday. So, with that being said, we want to pay attention to what this tax reform means. This whole rally was on healthcare, border adjustment tax, and the tax reform. We're going to get one of those. It looks like we're going to get one of those things done. If the tax reform goes through, the market will go higher because a lot more revenue, a lot more profits will be made since the taxes will be lowered. So we want to pay attention. Like I said, guys, we have to read up. We have to understand what different implications have on the market, so that way we can filter out what we need and what we don't need. So let me go ahead and screen share, and we're going to break down my portfolio like I always show you guys. So, like I said, I always have people to buy other stocks that I do see attractive for long term. And, one stock I did have people buy was Berkshire Hathaway. And I had them to buy it on the dip, ever since the stock was oversold. And as we see, Berkshire Hathaway looks to, it's almost about to pierce 170 and go back up to record highs of 177 again. Like I said, stocks move 120, 140, 160, 180. This is the next step that we break after we can keep moving. The next step that we go to is 180. After 180 is $200. So we see that we're almost at about $900 worth of profit here. Like I said, I won't sell. This is definitely a long-term position. I want you guys to pay attention to the long-term positions that I do take, because some of these names I am in. Okay, so I'm going to be buying Berkshire Hathaway. I'm going to be buying Honeywell as well, because the tax reform policy was, is what really I have to see get done or get close to being done. So that way I can, actually buy shares. So just in case, they said the healthcare was horrible or something like that, you'll probably see negative effects in companies that will profit from it. So Honeywell will definitely be a buy for me. This is exactly why I bought shares. We're up about $100 on a position, $200 for the day, but $100 is what we have to pay attention to. So Honeywell is definitely a $150 stock. This is me looking for long-term growth. So anytime we look for long-term growth, we definitely want to pay attention to the charts, and we want to pay attention to the financials and what the CEO says. So this is the whole point of investing before you buy. You want to get a feel for the market before you jump in feet first and, start trading, and, you start to see losses, and you think, the best way to recover from a loss is to go ahead and trade another stock. No, we don't want to do that. We want to, after we lose on a trade, we definitely want to invest and see if we can make our money back. That'll be the best way, and that'll be the best lesson for you, because it takes time. It takes you to be patient to make that money back. So you will increase your patience with a lot of these long-term stocks. This is typically why I look at a lot of long-term stocks, because I know if anytime I do take a loss, I could just jump into any other company and hold it for, maybe a couple of months here and there. My money's made back at a premium. So we want to pay attention to what the CEO says. Like I said, we want to pay attention to the financials, increasing revenue, and, the policies that they might benefit from. So Honeywell is definitely a company that will benefit from the tax reform. So we have Lululemon. This is bought because it was oversold. We're going to take a look at that chart and see if it's still oversold. PLX is, like I said, this is what happens when you invest in penny stock, where you invest in stocks that you think there's going to go up. So SPU was definitely another one. This one was a pump and dump. So I want to see what happens when we invest in pump and dumps, right? Because a lot of people, they do promote them, and a lot of people are getting caught holding the bag for this one. So that's definitely it. And as we see, we turned negative for oil, because oil did spike up to $50 and fall back down. Now, oil should run back up to 50 again and probably hit the daily moving average. But we want to pay attention to pay attention and see what happens with oil throughout the day and throughout the week. Because we are approaching the summer, and we definitely want to see the effects on that. So let's get straight into it. I'm definitely still holding STX Seagate Technology. This is definitely one that kind of irritated me because we start to see buyers step back in. Now with buyers stepping back in, my buying price seemed to be resistance, and the stock fell right back down. So that kind of irritated me a little bit. But as we see from the 5-day or 15 minutes, so it depends on how you view the stocks, and that'll pretty much show if they're oversold. Because we change it to 5-day, we see that it's not oversold anymore. But if you change it to 5-day by 15 minutes, we see that the stock is still oversold and due for a bounce. So let's check out the 1 minute by 1 day. We see the stock is still receiving a lot of selling pressure, and the reason it's receiving a lot of selling pressure is because there's a lot of hedge funds that are short this company. So they should be looking to cover once the stock does rebound, and this should rebound pretty good once shorts are covering. So like I said, full disclosure, I did buy shares at 43.28. And you see that I'm taking a $1 a share loss right now, but hopefully, we can see this thing run back up to 45. We see 45 is resistance for this stock, so hopefully we will try that again. We see 43, 28 or whatever, my exact buying price acted as resistance for the stock. So I'm not too worried about this because anytime I do take a loss, I can just go into any credible company and make my money right back. So, it really doesn't matter to me about taking any losses because I know how to make my money right back and make a premium. So this is exactly why you see me make my biggest gains were Take-Two and Apple, because I made horrible trades. Like for Facebook, I was holding Facebook, in the election. So once Trump was elected, Facebook definitely it tanked. And due to Robinhood, not letting me be able to sell, I was in along for the ride. So no matter what Facebook stock did, I was along for the ride. It wasn't really much I could do about it. So this is typically me right here. I was in that selling point right there, and then you see shares typically ride back up. But I did receive a premium with those Apple shares and with those Take-Two shares. Take-Two kept hitting all-time highs, and Apple kept hitting not Apple. Apple was climbing up to all-time highs. So, like I said, we can always lean back on a credible company when we do take a loss. But I don't want to encourage you guys to be taking losses. What I really want you guys to do is have a full knowledge of how to look at companies, how to look at balance sheets, how to look at guidance for the year, so that way you'll know your money is safe with that company. Because a lot of people are saying that stocks are not safe. That's very true. But at the same time, we want to make sure that we're investing in credible companies that demand buyers to buy the stock because it's going to trade at a premium sometime in the future. So, like I said, guys, this is as easy as it comes. A lot of people make it seem super hard for you to go ahead and invest and trading stocks, but typically that's not it. You definitely want to do your research. You see Berkshire Hathaway piercing through that daily moving average. Daily moving average calls for the stock to be back at, let's see, it's 165. We're trading at a premium of 168, so we did see a pretty good gap. And as like I said, when you notify people that things are oversold, they typically don't pay attention. But we see a good bounce here, and we might see it go back up to that that gapping point of 177. So when you're dealing with these long-term stocks, you can either buy on a dip. You can buy. Well, I wouldn't suggest you buy at all-time highs, but I suggest you wait a little bit and then step in. But we never want to buy on all-time highs. A lot of people they do encourage you to buy when the stock is breaking out, but that's definitely for a trade. That's not for an investment. So we have to pay attention to the trading tips that are used for investing. We don't want to use any trading tips that that are used for investing because it typically gets you out of that long-term mindset, and you focus on short-term gains. So Apple, we can say Apple is going to $200, right? Because we see the growth there. We see exactly what the company is doing. If you bought at 89, you're definitely just about to double your money. If this thing goes up about $20 more. So we want to pay attention to growth. That's pretty much it. Pay attention to growth and watch those companies. Once you have a growth company, there's no reason to sell. There's no reason to trade any penny stocks. Just keep buying more of that growth company. Your gains will come at a certain time. You just have to be patient. A lot of people aren't patient when they're trading stocks. We want to be patient because these gains do take time. We see TNA, 52, now it's at 115. Did you think a lot of people they probably weren't patient? They probably sold right here, and they probably sold right here when they see it getting close to $61. But you have to be patient. You have to have a long-term view on it, right? Once it goes to 50, or we can say, okay, it's at 40. We see dip at 50. Okay, it's going to 60. Once we see 60, we say 90. And after 90, we say 120. So 120 will be the next resistance level for this. So like I said, like I show you guys every single time, we have to pay attention to these increment rules. I made these rules up just for you guys. The increment rule is definitely easy. Traders pass it on down, from one trader to the next, from one trader to the next. I want to make sure you guys actually know exactly what I'm talking about, from 20, 40, 60. And that's typically what you can use when you do invest in stocks. So Starbucks. One way to look at Starbucks, we see that Starbucks did split, I think, about $45. So 40, 60, where 60, next spot is 80. So this is a long-term growth perspective, but we see that the stock is oversold. Overbought. So whenever we can get it checked down in buyers, that's typically our time to buy a growth name, because we definitely want to focus on growth rather than focus on boring stocks. So if we can, do our homework, if we can, actually listen to what the news has to say and filter out what we need for our growth portfolio, that'll be a plus. But we want to focus on growth. That's why I want you guys to focus on growth names, so that way we can trade, or we can trade them, or we can invest in them. So that way, you'll be definitely comfortable with taking a loss and then go ahead and buy an investment, because you'll make that return back and with the premium. So that's all I have for you guys. Oh yeah, I was supposed to mention Lululemon. Let's definitely see if that's oversold for here. We see Lululemon is definitely increasing in buyers, but right now buyers are kind of slacking off. We see the market is at all-time highs, but we see Lululemon is still struggling here. So we definitely want to be aware of that. And also Lululemon is definitely above that daily moving average, letting us know that buyers are still there, but the buyers are kind of weak. We see it's almost on that line, and that line is acting as support. So, a pierce through here, and we're going lower, but if we can bounce off of this support level here, we're definitely going higher and probably piercing past this 44 or this 54 level, as we see that acted as a resistance. Like I told you guys before, if we can break through 54, we go to 60. But these are long-term, stocks that we must get behind. So Berkshire Hathaway is another stock that we want to get behind. Honeywell, a stock we want to get behind. Lululemon, a stock we want to get behind. Ford, you see, I'm still up on Ford. It doesn't matter. The stock trades, it's very, I would say, it's less volatile than any of the names. We see it's up 17%, up 1%. It's a small play, but gains are there. We can't be picky with the gains, especially if we're playing with a commission-free broker like everybody loves to play. We can't be really picky with making $30 here, making $40 here, making $5 here. Let's take our gains and get out, because the broker is free. If you're not playing with the commission broker, we definitely are. If you're not playing with the commission-free broker, we definitely suggest you start to have an investor mindset, or start betting bigger amounts of cash to make those gains worth your while when you do pay for those commissions. But that's all I have for you guys. I'll be back with more. I might start buying Honeywell, but as we see, Honeywell is definitely in the overbought range. 125 is definitely a daily moving average for that, and also it is a gap up. So I might be picking at some shares here, but I really want some below 130. So 60 to 65 cents is what I need for this stock to go lower, and I'll definitely be a buyer for a long-term perspective, and I'll definitely hold this throughout the year, all the way into next year, because like I said, I was really confident in that conference call. So if you have any investments that you do want to pay attention to, if you want to see how good Apple is doing, how good Cisco is doing, or how good any company is doing, we listen in on the conference call, and we also read the articles that are published about the company's growth. And that will put you at an investor mindset, so that way you'll know exactly what you need to do, or what price is this best bought at. So that's all I have for you guys. Take care.